Okay, students, so we have been talking about banking services. During the last weeks, we learned about savings account, then fixed deposit accounts, current accounts, and checks, and so on. So we learned about those things, and we are now going to talk about services related to electronic cash. Now, electronic cash is a very important thing, something which is booming, and we must be thorough with this, not just for the exam, but for our lives, how to use electronic cash. And if you have any question, so once I post the session, you can ask me any question. Just keep a note of it and ask me the questions you are having. Okay. So since we have a less number of students, you are always encouraged to ask questions, nothing to think about that. Services related to electronic cash. So payment for buying goods or services can be made using physical cash or any other payment settlement method. Okay, you can use a physical cash or another payment settlement method. Until recent times, businessmen used coins, notes, and checks for the settlement of payment. So when I was talking about physical cash, it includes coins, notes, and subsequently checks. That is also a physical mechanism. Now, banks have introduced different services to customers using the electronic communication technology. Now, with the booming up of internet and all these 5G technologies, 4G technologies, and IT, what has happened is banks have introduced electronic communication technology. So now you have smartphones and all that. These services are known as services related to electronic cash. So what are the services related to electronic cash? The services that are introduced by banks using the electronic communication technology. Okay, electronic communication technology. So electronic cash or e-cash is an electronic payment settlement method which can be substitute for the cash and checks. Okay, so e-cash, you can substitute physical cash, physical cash and checks, you can substitute them. You need not to use cash or checks if you have e-cash. Let's say you can use your mobile phones to make payments. Okay, now let's say you go to a shop and you're buying something, and if you can pay a QR code, okay, if you can scan a QR code and make a payment, then no longer you need physical cash. ඔයාට QR code එකක් scan කරලා payment එකක් කරන්න පුළුවන් නම් ඔයාට තවදුරටත් physical cash ඕන වෙන්නේ නැහැ. Or else if you can use a card, let's say ATM card or credit card, and make a payment, you don't want to carry physical cash. That will be very, very easy for you. Okay. So let us discuss commonly used electronic cards. Now we are talking about electronic cash. So what are the most famous mechanisms offered by banks? These are credit cards, debit cards, and ATM cards. These are very important, not just as a lesson, but also as a life learning point. When you are going to the corporate world, when you are going to your lives in another 3 or 4 years, you will have to use credit cards. You will have to use debit cards. You will have to use automated teller machine cards. Okay. Okay. Then let's start writing the note. Put the subheading as services related to electronic cash. I will read this out. So once I read it out, you can write it. Payments for goods or services can be made using cash or other settlement methods. In the past, business mainly used coins, notes, and checks for the transactions. Today, banks offer various electronic payment services through modern technology. These services, known as electronic cash, serve as the digital alternative to cash and checks. Commonly used electronic cards are given below: credit card, debit card, and automated teller machine cards. So you can take a couple of minutes and write this down. Okay, let's move on to the next slide. So firstly, we are going to learn about credit cards. So what are the credit cards? So these are a type of card issued by commercial cards on credit basis. The important thing is it is on credit basis. It's a Naya card. Okay. It is not essential for a customer to have a bank account in order to obtain such a card. A credit card can be submitted for recommended trade organization to buy goods and services on credit basis up to a certain amount. In addition, credit card also be used to withdraw cash up to a certain limit from automated teller machines. Banks will later inform the credit card holder credit balance obtained using the credit card. Now, credit card is an important thing. Okay, credit card is an important thing. Now, unlike other cards, credit cards come with a credit limit. Okay, credit cards have a credit limit where you can borrow a certain amount of money for consumption to use for purchasing goods and services. Firstly, you can go to a shop, give the credit card, and without having any money, you can purchase it up to your credit limit. Or else you can put it to an ATM machine and take out cash without having money. Okay. Now, now this does not come for free. You will have to pay unless you settle the money on time. You will have to pay a hectic amount of money to the bank as interest. Okay. You have to pay a lot of money as interest to the bank if you do not make the settlements on time. So what happens? Banks are giving you a card. This card is credit basis. It has a credit limit. So, and you need not to have an account in that bank as well. Most probably we know banks like Standard Chartered, then Amex, Nation Trust Bank, they give the cards, HSBC card, Amex card are very popular, but not always you are having the accounts with them, but you have the credit card. Okay. So based on your viability, let's say based on how good you are. Now they don't give cards to people who are walking on streets. You have to be at least someone who is a graduate or a professionally qualified person or a person who is doing a proper job. Only that kind of people are being given credit cards. Okay. So they go and give a card which have a credit limit. Okay. And you need not to have a bank with, you need not to have a bank account with them. So you can go to a shop and even without having money, you can buy goods and services. Okay, let's say it's a salon. You can go and pay and take the salon services. Let's say you can go to Kiehl's and buy goods. Or else, let's say you have to pay in cash and something tied up, you can put it to an ATM machine and you can take out money up to a certain limit. Okay. So after the period, after particular period, bank will tell you, okay, so and so, you have used this much of money during the period. Your total credit limit is 100,000. You have used 50,000 rupees during the month. So you have to settle 50,000 rupees before a certain date. Before a certain date. If you do not settle that, bank will charge you interest, a very high interest. Okay. Not just simple interest, it will be a very high interest bank will charge you. And then bank will also say you will have to pay a minimum balance. If you do not pay that minimum balance, on top of that interest charge, bank will give a penalty as well. Okay. Okay. Let's look at the next slide. The credit card holder is liable to pay the credit balance to the bank. The transactions related to credit card occur via automated teller networks. The international credit card networks are Visa, Master, American Express, and Discover. The commercial banks issue credit card with the support of these credit card networks. Okay. So as I said earlier, credit card holder, so I told about that 100,000 example, you are liable to pay 50,000 at the end of the month. Okay. At the end of a particular date, you must pay it. Okay. Unless you will have to pay a lot of interest. Then this credit card business, it is not operated by local, like the business at large. Okay, because this credit card, you can go to another country and make a payment. Okay, you can go to Singapore, okay, you can go to a Dubai, and you can make a payment from a Sri Lankan bank credit card. Let's say it's a People's Bank credit card, then you can go and make a payment from that. Let's say it's a Sampath Bank credit card, then you can go and make a payment. How? There are international credit card networks known as Visa, Master, American Express. Okay. Now, what the local banks do is they join with this international credit card network. So, if your parents have a credit card or debit card, go and see it. It will mention as Visa card. Okay. Or else there will be two symbols like Mastercard, American Express. Okay. There will be something written like that. Okay. So commercial banks issue credit cards with the support of these credit card networks. So the following are some examples for such credit card. Bank of Ceylon, C Bank Visa. Okay, so this is the bank name and it's Visa card. Okay, Visa card. Then People's Bank, People's Visa. So those are the key things with respect to credit cards. So we can write the note. I will firstly read this out. So after that, I will leave the session for you to ask any questions. Okay. Credit card. Credit cards are issued by commercial banks on credit basis. And having a bank account is not required to obtain a one. These cards allow users to purchase goods and services from authorized merchants on credit up to a specific limit. Additionally, credit cards can be used to withdraw cash from ATMs within a set limit. The bank later informs the cardholder the utilized credit balance, which must be repaid. Credit card transactions are processed through automated electronic networks. Major international credit card networks include Visa, MasterCard, American Express, and Discover. Commercial banks issue credit cards in partnership with these networks. So examples are Bank of Ceylon C Bank Visa Card, People's Bank, People's Visa Card. So take a couple of minutes and write this down. And there is another important thing. Okay. For you to make a payment from the credit card, there should be a machine in that shop. And that machine is called POS machine. POS machine. Okay. That is a POS machine. POS machine. Point of sales. Point of sales machine. Okay. So that's it. So just because you have a credit card, that doesn't mean you can go and make a payment from any shop. A shop that only accept credit card and debit card payments only, you can make the payments. For them to accept the payment, they should have a POS machine. A POS machine එකට තමයි අපි ගිහිලා touch කරන්නේ. Now earlier how people use credit card was they swipe the card. They swipe the card. Firstly, they swipe the card. Then there was an electronic chip inside the credit card, and they used to put it to the machine. Nowadays, you can tap it and make the payment. That is called NFC technology. You can just tap it, you can tap the card, and then they will make the payment. Okay. Take a couple of minutes and write this. Okay. Okay, we learned about credit cards, and now we are going to learn about debit cards. So debit cards are the cards issued by commercial bank to their customers, facilitating them to make payments directly using the cash available in the bank account. It is required to have bank accounts to obtain debit card. Goods and services can be purchased using this card up to the cash balance available in the bank account. And when goods and services are purchased using these cards, the relevant amount will be directly debited to the bank account of the customer. Now we learned about credit cards. Credit cards, they give you a credit limit. But in debit cards, you need to have an account with that bank and you can use the money available in the bank account using your debit card. You can simply go and make payments using the debit card. So whatever the money available in the card will be deducted. Okay. Whatever the money in the bank account will be deducted. Let's say you have 25,000 in your bank account, and then you are going to a shop. Okay, you are going to a shop and buy 5,000 rupees worth of goods. And when you make the payment, you have 25,000 in your account. You make 5,000 payment, what happen is your bank account 5,000 will be deducted and your bank account will come down to from 25,000 to 20,000. When you go and make a payment from your debit card of 5,000 and you are having 25,000 in your account, so your bank account balance will come to 20,000. Okay, and you can buy goods and services as I said earlier. Only thing is you do not have a credit limit. You have a debit card, so whatever available in your card only you can spend. Okay. So the special fact about debit card is that it transfers the relevant value of transaction by reducing it from the customer's account and by transferring that to the seller's account via bank. So what happens is it will be now that 5,000 is deducted from your bank account and that is transferred to the seller's account. Let's say Kamal uh, made a payment for 5,000 rupees using his debit card, buying books from Samanala bookshop. What happens is from that 5,000 will be deducted from uh, his account and will be transferred to Saman bookshop account. Okay. In addition, it is possible to withdraw cash in the account from the automated teller machines by using this debit card. So that is very common. If you want to take money, you can simply use your debit card and take out money. The following are some examples for debit cards. Sampath Bank Set Card, Commercial Bank, Cat Super Card. Okay, okay, let's I'm not sure this Cat Super Card. Okay, so let's know that. People's Bank, I think there was something called Pet Card. Debit cards are, so you will have to put the subheading as debit card. Debit cards are issued by banks to help customers make payments directly from their bank accounts. To get a debit card, you must have a bank account. You can use it to buy goods and services, but only up to the amount of money available in your account. When you make a purchase, the money is immediately deducted from your bank account and transferred to the seller's account. A key feature of debit card is that they allow you to spend only what you have in your account, unlike credit card, which let you borrow money. Debit card can also be used to withdraw cash from ATMs. Examples for debit cards: Sampath Bank Set Card, People's Bank Pet Card. Okay, take a couple of minutes and write the note. Okay, let's move on to next slide. So we learned about credit card, debit card, and now ATM cards. Okay, these cards are issued to customers by a commercial bank in order to provide services similar to that of a normal savings account. Money can be withdrawn from a savings account using automated teller machines that are operated via a computer. These cards can be used to transfer cash from one account to another account as well. Now, ATM cards are more or less similar to debit cards. Simply, you use it to take money out of your savings account. So you do not go to the bank and counter. Rather, you go to a automated teller machine and then take money out of your savings account from ATM cards. Okay. So following are some examples of automated teller machine cards issued by commercial banks. People's Bank PET, Bank of Ceylon CNET, and Sampath Bank SET. So those are the examples. So you can write them down. I will read this out. ATM card. Banks issue ATM cards to customers, allowing them to access their savings account easily. With the ATM card, you can withdraw cash from your account using ATM, which is operated by a computer. These cards also let you transfer money from one account to the other. Okay, and then examples include PET of People's, CNET of Bank of Ceylon, and Sampath Bank Set. Okay, so those are the examples. So you can write them down. Okay, so we are going to the next slide. Importance of the services related to electronic cash. Okay, so we are going to look at what are the advantages of using electronic cash. Instantaneity. Okay, so services related to electronic cash are efficient and methodical. Since all the activities are performed via electronic media, banks and customers can save time doing the activities easily and quickly. Let's say you want to make a payment to the shop for 5,000. Okay, imagine you go to the bank, take 5,000 from the counter, waiting in the counter, okay, and taking money and coming back to the shop and making payment. That is hassle. But if you have a card, you can just tap it and make the payment. That is very easy and quickly. So very instant. Okay. Minimizing the risk. So risk of losing the cash while carrying it is reduced due to these services. So let's say you want to make a pay, you are going to buy a mobile phone, which is 1,50,000. So imagine you are taking 1,50,000 cash and somehow some pickpocketer came and take out your cash. Okay, then you are at risk. Or else what you can do is you can take the card. With the card, the important thing is, let's say the pickpocketer take out your purse and card was in it. So you can call the bank and tell your bank, hi, I have lost my card. Please stop making payments out of this. Okay, so it will reduce the risk. Okay, then recording information automatically. Since all activities are performed automatically, transactions are recorded easily and accurately. Now, once you pay for your all the bills from your electronic cash, you can trace it. So let's say you are going to Keels and making a payment, then you are going to a bookshop and making a payment, then you are going to your kids' education, you are making a payment. Let's say then again you are going to hospital and making a payment. Let's say you are going to a restaurant and making a payment. So at the end of the month, you can see all the information. I have made this much of payments to this much of payments to this much of payments to this. You can trace it. Or else if you spend physical cash, you cannot trace it. Okay, no way of tracing. Ability to transact any time of the day. Okay, now banks are working only 8 to 3 o'clock, I think. So if you are using electronic cash, you can make the payment anytime, anywhere, as long as you have electricity and internet. Okay, battery power or whatever. If you have those things, you can make the payment. So you can write this down. I will read it out. Importance of services related to electronic cash. The following advantages can be achieved by using electronic cash for the transactions. Instantaneity. The services related to electronic cash are efficient and methodical. Since all the activities are performed via electronic media, banks and customers can save time doing the activities easily and quickly. Then minimizing the risk. The risk of losing cash while carrying it is reduced due to the services. Then recording information automatically. Since all activities are performed automatically, transactions are recorded easily and accurately. Then finally, ability to transact anytime of the day. Okay, take a couple of minutes and write this. Okay, next, let's look at what are the limitations of services related to electronic cash. Okay, risk of data being destroyed. Now, sometimes electronic data can be destroyed because of technical failures. Let's say some hard drive, because of some reason, got deleted. Okay, so then it might lose your data. Okay, risk of being exposed to new type of electronic frauds. For example, person can use PIN of another person and fraudly to do a transaction. Let's say you are going to do a transaction through your ATM card, and what some people do is they write down PIN and keep it in the purse itself. Okay, you have the card and you have the PIN. Then they can simply put the PIN and take the cash. Okay. So never keep the PIN with the card and never expose your PIN, personal identification number, to anyone. Okay. Then incur an extra cost when you're making the payments from credit card. And as I said, if you delay the payment, then you will be charged, and you will be charged a very high interest rate as well as penalty fees. Okay. Inability to use payments at certain shops. At some shops, if I told you that you need something called POS machines, so if you do not have a POS machine, you cannot make the payments at certain shops. So limitations of services related to electronic cash, risk of data being destroyed, risk of being exposed to a new type of electronic frauds, incurring an extra cost, and inability to use payments at certain shops. So those are the limitations. And uh, take a couple of minutes and write this. I will read this out. Limitations of services related to electronic cash. Please write this as the subheading. Then risk of data being destroyed. Problems can arise due to the risk of data being destroyed as a result of technical error. Okay. Then secondly, risk of being exposed to new type of electronic frauds. Example, a person can use personal identification number of another person fraudulently to do the transaction. Then third, incurring an extra cost when the payments of a credit card are delayed. A penalty for delayed payments and high interest rate will be charged. And fourth, inability to use the payment at certain shop. Okay, so you can take a couple of minutes and write this. Okay, with that, we will conclude today's session, and thank you so much.